In this video, I'm going to show you how I use liquidity on supply and demand zones using top-down analysis. So the first thing that we need to understand is we have to understand the structure and then the key level in the higher time frames so that we can at least use that to our advantage when we want to look on to the lower time frames. So on this section, we're going to cover what we need to do, because basically we can clearly see that we have the higher high, we have the higher high, and then we have the higher lows here. And then also we have the demand zone here, and also here we have the demand zone. But these two demand zones, they have different structures in between here, because we can clearly see that within this correction here, we have an internal low here that needs to be manipulated, and someone can still identify a demand zone before this low can be discovered. So using this top-down analysis will help you to avoid this kind of silly moves here, so that we can focus clearly on buying at the lowest price point. And you can clearly see from the candlestick patterns here that we have the structures that are different. We can see on this one, on the first one here, we have a higher high, we have a higher high, and then we have a higher lows here, and then we have the demand zone. But here we have the higher high, we have the higher high here, but we have the internal low. So mostly when you see this kind of thing, just focus on targeting this low when you see price moving to the downside, so that you can at least get to the lowest price point of this market. This will be used in the higher time frames only. In the higher time frames, we're going to focus on identifying the structure and also identify the supply and demand zones. So when we move on to the intraday time frame, this is where we will be looking to identify the market structure. So this time frame will give us a clear view of the analysis that we have identified in the higher time frame, and also give us an overview of the lower time frame analysis on where we should always focus on. But the key difference with this video is that we are not going to focus mainly on the market structure, because certainly if you notice that if we have a higher high like this, and then we have a higher high like this, we have a higher low, this is the market structure that we all know about. But what happens if we see that we have a bearish trend like this, and then suddenly we have a move to the upside? This will be your break of market structure, and then we will have a higher high, the new higher high. So we have this move to the downside, and then we will have some moves to the upside like this to produce a higher high. But in this case, we are not going to use that, because on the higher time frame, we identify the structure, the supply and demand zone, supply or demand zone. And then in this intraday time frame here, we are going to focus on market structure break, But there's only one different thing that we need to focus on and even check. We have this low here. This is the first initial low here. When price breaks this high here, this lower high, we wait for the market to make some few minor structures, to make some higher highs. So we are not going to focus on entering the market right here. We are going to focus on trading below this low here. I hope you understand very clearly. We are not going to focus on this low, and this low can still produce a demand zone in this time frame. Firstly, on this area here, price should also be very aggressive, and also price action will just confirm when price is reaching this key point here. We have to see the break of market structure. This area here is just a higher time frame potential reversal zone. So right now, if we have this, we can still recap before we move forward, because again, the first thing in the higher time frame, we focus mainly on the supply or demand zone, and then 2, we focus on identify the market structure, and then on number 3, this is where we make the entry decisions. So let me show you what I mean from here. So this will be your entry time frame. You can see right now, because we are going through time frame to time frame like this. Let's say we are on the daily, we moved on to the 4 hours, and then right now we moved on to the 15 minutes. This area obviously will look like it's very long, because right now, let's say we are on the 15 minutes. Here, this is the break of market structure from the 4 hours. Then the market will start to produce some minor higher highs here and higher highs. But we already know that mainly the structure of to change for the market to move to the upside is like this. But we are not looking for this move to the upside. No, we are looking for this move here to break lower again, to make a double one, to break twice to the upside. This is the second. This is what we need from here. We need the second manipulation to happen before we can enter the market here. And obviously, we have this pattern here. This is the inside bar that we are going to use for entry. And then we have this rejection. We have different types of rejections on this area, and also check for price action that is very aggressive to the downside before it can close with a bullish candlestick. You can see this. This is a massive candlestick to the downside, and then it also got rejected very quickly and then closed bullish. Okay, this is what you should at least try to understand in the entry time frame. So let me show you some few structures that might happen when looking at the structures in the lower time frame most of the time. From the higher time frame perspective here, we can clearly see that we have the demand zone. This is the higher time frame, and then we are looking to enter the market right here. This is the break of market structure, and then we have the higher high. We are looking for the market to trade below this initial low that made the break of market structure. Then we are looking to enter the market here only using this candlesticks patterns here that we have. This is the confirmations. Then we are looking to enter the market right here. But sometimes you might not be lucky as you think you are, because the market moves the way it wants. And then you enter the market here, and sadly, the market moves to the upside a little bit and then come and stop you out. You can still look for an entry below the zone. If you go and check, sometimes the market manipulate the supply and demand zones or even your order blocks. You will see that price is tapping outside that order block and still return inside it and move to the anticipated direction of the market. That's one thing that you should at least understand. And then from there, this is the same thing but vice versa, guys. Even on the supply and demand zone, the price can still trade above this high, the initial high that made the break of market structure. Then if we are looking to go short, price can still trade slightly a little bit above this supply zone here and then pushes lower. So to understand this very clearly, right now you can still make double rejection. Let's say maybe we are waiting for this high to be broken. Let's say this move touched here. That's my mistakes. So from here, we are looking to go short. Even price action will tell you that I'm ready to go low. But sadly, price shoot to the downside and aggressively move to the upside once more to make this price action here and then move to the downside. So the simplest way to understand, guys, we need to see price making another manipulation and quickly returning to the price range. That's how you should at least try to understand it. it will be very easier to understand it that way. This is the other time frame that you should at least try to look for. On the daily, we make analysis. On the daily time frame, we make the analysis, and then we move on to the 4 hours to make the middle time frame. This is where you should look for market structures, and then we have the entry time frame. And sometimes the market can still skip the middle time frame. If you can clearly see it, sometimes the market can move from the 4 hours to the 15 minutes. Sometimes it can be the daily and 4 hours. Sometimes it can be the daily and 15 minutes. It depends how the market moves in that particular day. And then we have the 4 hours. This is the analysis. On the 15 minutes, this is the intraday where we make the market structure. And then on the 1 minute, this is where we make our entry. You can still use other time frames, like from here, you can still use the 2 minutes, 3 minutes, or even 4 minutes if your trading platform has it. And then we have the weekly time frame here. You can use the 4 hours or the 3 hours, and then the lower time frame, 30 minutes, or even the 15 minutes. It depends if you have the confirmation on that particular time frame. If you don't have it, just leave that pair and focus on another trading pairs. So let's look at one particular example here. As I said before, price can slightly trade below or above the demand zone. So looking at this example, we can clearly see that we have the low here, that price shoot to the downside very aggressively to trade below it. And then we have the demand zone here. Price just shoot down below the demand zone and aggressively move to the upside to close bullish with this candlestick here. But if we move on to the 4-hour time frame, we can clearly see the same structure. Price shoot to the downside, touched this zone, made this low. We have the first low here, and then it's like this. The structure is like this. Then price went down, moved to the upside. So right now we have something like this. Price broke this previous high here. I hope you can clearly see it. Let me do something like this so that it can be very clear. This is this high here. This low is this low. And then we have this low, which is this low. And then because we are looking to enter the market below this low, the one that traded above this high here. So that means we are waiting for the market to trade below and then shoot to the upside. This is the 4 hours. So right now that we have the market structure that we need to focus on, so clearly you can still move on to the lower time frame, or if price action allows us to trade on that particular time frame, we can still try to do it, but I prefer to move at least a little bit lower so that I can at least see price action in a different way and also to reduce some risk. So from here, we have this high, which is this one here. And then we have this low. This is the low. And then we have this low. This is the low. So from here, when price breaks to the upside, you are not looking to enter the market right here. You are looking to trade below this low here. And then you enter the market to the upside. That's how I do my top-down analysis when I want to make my entries so precise. I just wait for the manipulation to happen and then stick to what I can at least understand. So if we move on to the lower time frame here, this is the 15 minutes, or maybe before we move on to this 15 minutes, guys, let me show you something. Because we have this structure, let me show you again. We have this move to the downside, is this one, and then we produce this low. This is the low. We move to the upside here, and then we move to the downside again to make this low, and then we move aggressively to the upside to make this high, and then we have something like this. So from here, you are waiting for the market to trade below this low and then give you those confirmation candlesticks. And as I said before, price should at least move aggressively to the downside like this and then close with a bullish candlestick. And in this way, you can clearly see some sort of an inside bar, and then you can enter here and let the market move to the upside. So the same thing will apply in this time frame. You are waiting for the market to trade below this low here and then close with a bullish candlestick. And in this case, we can clearly see that price was very aggressive to the downside, and then it stops around this area here, and then you can enter here and then let the market move to the upside. Let's look at another example. This is Bitcoin on the 4 hours time frame. Okay, we have almost the same thing, but this time we don't have the particular structure that we can still identify. But looking at this price action from here and from here, you can clearly see that this one is very impulsive and this one is very corrective. So from here, you will wait for the market to enter this area, and then you will move to the lower time frame so that at least you can try to minimize the risk, because you don't even have a confirmation here. Your confirmation can be a little bit higher, it can be around here, and then your stop loss will be here, while the market is just going to move to this area and then drop. So this is the lower time frame. On the lower time frame, we have to identify the structure. Price shooting to the downside, we have this high, broke again, we have this high and higher low, lower high, I mean to say lower high, lower high, lower high, lower low, some lower lows here, and then we are waiting for the market to break at least the last lower high. And you can see after making this lower low, price will move to the upside, breaking this lower high and even this lower high. So from here, we have to wait for the market to return to this area, trade below this initial move that broke this swings high here, and then you confirm your entry here, and then you ride the trend. So this is the 15 minutes. Okay, so let's see how the market behaved. Okay, we can see that, and as I said on the previous video, I said that you have to wait for the market to see at least is giving you a little bit of a price action or a momentum. Prices to move very aggressively to the downside and give you a positive move to the upside before it can reverse. Most of the time, those things will happen. Most of the time, the prices has to be very aggressive. If you look onto the 1 minute time frame chart and just look at it and study it, you will see those things happening every day. Price has to be very, very, very aggressive to the downside. And we can clearly see here, we have this aggressive move, small aggressive move, and then suddenly we have this huge aggressive move to the downside. And then it got rejected very quickly. This is your entry. And also, we have traded above below this low, which triggered some sell orders and some of the stop losses. So then you enter the market right here, and then let it move to the upside. But if you want to minimize the risk, because we are moving from higher time frame to lower time frame to lower time frame, let's look at the 1 minute time frame. Right now, price is below that area here, but we are waiting for price action. Nothing is happening. Some of you will say, okay, this one is just breaking out, but it is not breaking out at the moment. Price is just making some silly moves. Like for an example, even this one, you might say this is a breakout. But then what happened after? Price just shoot to the downside. So from here, what we can do is wait for price action. Okay, we can clearly see an aggressive move to the downside. And then there was no decisions here. And then price shoot to the upside. And then suddenly another move to the downside with this red candlestick. But it got rejected very quickly. And price is still below this low that was identified on the 15 minutes time frame. So from here, we just wait, or we can enter the market right here and then ride the trend. That's how at least you should at least try to understand this. Let's move on to another example so that at least we can practice this into our brains. We have AUD CHF on the weekly time frame. Can clearly see that price broke this and then broke this. We have this structure, and obviously after every bullish move there must be a bearish move. So in this case we have the bullish move, so we need to see this. So now we need to focus on looking for the market, this price action here, this bullish candlestick, to move to the upside, touch this zone, and then we will wait for something like this. Because we have this move to the downside here, this one was just a correction. We will wait for the market to give us, to touch the zone around this area, break the structure, wait for the market to come and then break this initial move that break the structure, and then look for sell here. Am I clear? I hope I'm clear. Right now, in the lower time frame, guys, from here, we need to look for this move here. Again, I'm repeating myself. We have this move, and then we have this correction, and then sorry about that. Let's say we have this one here will be our area. This is this supply zone here. So we need to see this move to touch the supply zone, and then have to wait for the market to break the structure like this, and then we wait once more because we still have this high here. We wait for the market to trade above this high, and then gives us a confirmation here, and then we can sell to the downside. Let's look at the lower time frame. Okay, before we can move on to the lower time frame, obviously this was taken from the chart just for educational purposes only. So let's move on to the lower time frame. You'll see what happened there, very clear and very precise. I don't know how I missed this one, but it's fine. We have this area. This is the 4 hours right now, 4 hours supply zone, and then you can clearly see that price touched the supply zone. It made a lower on this area, and then price broke through it. But because we have this initial move here, we have to wait for the market to trade above it, and then gives us a confirmation here, and then we can sell to the downside. Other than that, move on to another trade. So let's clear this and then look. Before we move on, let me show you. We have the 30 minutes right now. This is the initial high that needs to be broken, and we can clearly see by this price action here. We have this low, we have this low, and clearly we can see that price action is just very corrective to the upside. There is no move that is moving to the upside that is stronger than this one here. So from here we have to wait for those confirmations, and you can clearly see that we have this aggressive move to the upside, and then we have this rejection very quickly, and then we have another move to the upside, and then we have another move to the downside. And obviously if you were selling from here, your stop loss must not be here. You can still put it above here. You will be safe. So let's look on how the market behaved. So from here is just plain simple. You enter the market right here, and then if you want for retracement, you can enter the market right here. Stop loss the same. You can add, because this is the 30 minutes time frame, above your high. For my personal trades, I add at least 7 to 10 pips. It depends on my mood or how I feel with the trade at that moment, but mostly it's just below 10 when I want to add, or when I want to never mind. Let's move on to this example. We have the 1 hour price. You can clearly see that this move here is very strong. This one is just very corrective, and then we have a break of market structure, and then we have the liquidity that was taken around this area. So in the lower time frame, we have to wait for price to do something. We have this low, and then we have this low, this high. This move here broke this previous low, So right now, that means we have a structure that is looking something like this. So obviously, a lot of people will be stopped out in this kind of situation because the market broke this high to the upside and then it shoot to the downside. For those who are using breakouts, they are still in a loss, and suddenly the market trigger these people into buys. These ones are still in a, or maybe these ones are in a sell and these ones are in a buy, but they are all in negative. Right now they are all in negative. If someone took a sell here, negative, this one negative. And if you think the market is still done, it will do something silly. It will move to the upside, break this high. These people will still hold their trades right now because they were holding this loss. These ones are still in a negative because they are in a sell. Right now, they will think the market is breaking this and then they will close their positions at the moment, because I know some of you don't even use a stop loss. So from here, that means we wait for the market to shoot to the downside. We have a confirmation here and then trade lower. So in this kind of situation, you might be mad because even if you try to enter a breakout, you'll be in a loss. If you enter a breakout here, you'll still be in a loss. Because I know most of the people like to do some silly things. I don't want to mention names. Let me show you something. So like this, you see, this is why on this video we're looking to enter after the market has made a manipulation, so that we cannot be trapped. Even for example purposes, on this 1 hour time frame, look, price shoot to the upside and then a massive drop. It happens most of the time. Let me see. Even this one, price shoot to the upside and then dropped. This one, you'll be lucky, but the market will always do some silly things, as we can see from here. So from here, we can clearly see that price is having this high, and we have this low, and then price shoot to the upside, triggering this, and then closed bearish with a rejection. And then let's see how the market behaved in this situation. The market shoot to the downside. That's how at least you should try to understand this. But if you give it more practice, then everything will be fine. Don't forget to join our Telegram. The link is in the description below. Don't forget to subscribe.